Hi guys, welcome to my YouTube channel. Top best investments to multiply your money. 1. High yield savings accounts. A high yield online savings account pays you interest on your cash balance. And just like a savings account earning pennies at your brick and mortar bank, high yield online savings accounts are accessible vehicles for your cash. With fewer overhead costs, you can typically earn much higher interest rates at online banks. Plus, you can typically access the money by quickly transferring it to your primary bank, or maybe even via an ATM. A savings account is a good vehicle for those who need to access cash in the near future. 2. Short-term certificates of deposit. Certificates of deposit, or CDs, are issued by banks and generally offer a higher interest rate than savings accounts. And short-term CDs may be better options when you expect rates to rise, allowing you to reinvest at higher rates when the CD matures. These federally insured time deposits have specific maturity dates that can range from several weeks to several years. Because these are time deposits, you cannot withdraw the money for a specified period of time without penalty. With a CD, the financial institution pays you interest at regular intervals. Once it matures, you get your original principal back plus any accrued interest. It pays to shop around online for the best rates. Because of their safety and higher payouts, CDs can be a good choice for retirees who don't need immediate income and are able to lock up their money for a little bit. 3. Short-term government bond funds. Government bond funds are mutual funds, or ETFs, that invest in debt securities issued by the U.S. government and its agencies. Like short-term CDs, short-term government bond funds don't expose you to much risk if interest rates rise, as they're expected to do in 2022. The funds invest in U.S. government debt and mortgage-backed securities issued by government-sponsored enterprises such as Fannie Mae and Freddie Mac. These government bond funds are well-suited for the low-risk investor. Government bond funds may work well for risk-averse investors, though some types of funds, like long-term bond funds, may fluctuate a lot more than short-term funds due to changes in the interest rate. ETFs or mutual funds. 4. Series I bonds. The U.S. Treasury issues savings bonds for individual investors, and an interesting option for 2022 is the Series I bond. This bond helps build in protection against inflation. It pays a base interest rate and then adds on a component based on the inflation rate. The result: if inflation rises, so does the payout. But the reverse is true: if inflation falls, so will the interest rate. The inflation adjustment resets every 6 months. Series I bonds earn interest for 30 years if they are not redeemed for cash. Like other government-issued debt, Series I bonds are attractive for risk-averse investors who do not want to run any risk of default. These bonds are also a good option for investors who want to protect their investment against inflation. However, investors are limited to buying $10,000 in any single calendar year. 5. Short-term corporate bond funds. Corporations sometimes raise money by issuing bonds to investors, and these can be packaged into bond funds that own bonds issued by potentially hundreds of corporations. Short-term bonds have an average maturity of 1 to 5 years, which makes them less susceptible to interest rate fluctuations than intermediate or long-term bonds. Corporate bond funds can be an excellent choice for investors looking for cash flow, such as retirees, or those who want to reduce their overall portfolio risk, but still earn a return. Short-term corporate bond funds can be good for risk-averse investors who want a bit more yield than government bond funds. 6. S&P 500 Index Funds. If you want to achieve higher returns than more traditional banking products or bonds, a good alternative is an S&P 500 index fund, though it does come with more volatility. The fund is based on about 500 of the largest American companies, meaning it comprises many of the most successful companies in the world. For example, Amazon and Berkshire Hathaway are two of the most prominent member companies in the index. Like nearly any fund, an S&P 500 index fund offers immediate diversification, allowing you to own a piece of all of those companies. The fund includes companies from every industry, making it more resilient than many investments. Over time, the index has returned about 10% annually. 7. Dividend stock funds. Even your stock market investments can become a little safer with stocks that pay dividends. Dividends are portions of a company's profit that can be paid out to shareholders, usually on a quarterly basis. With a dividend stock, not only can you gain on your investment through long-term market appreciation, you'll also earn cash in the short term. Buying individual stocks, whether they pay dividends or not, is better suited for intermediate and advanced investors. But you can buy a group of them in a stock fund and reduce your risk. Dividend stock funds are a good selection for almost any kind of stock investor, but can be better for those who are looking for income. 8. Value stock funds. With the run-up in many stocks in the last couple years potentially leading to significant overvaluation, many investors are wondering where they can put their investment dollars. Value stock funds may be a good option. These funds invest in value stocks, those that are more bargain priced than others in the market. Plus, value stocks tend to do better when interest rates are rising, as they're expected to do in 2022. Many value stock funds also pay a dividend, so that's an additional attraction for many investors. Value stock funds are good for investors who are comfortable with the volatility associated with investing in stocks. 9. NASDAQ 100 Index Funds. An index fund based on the NASDAQ 100 is a great choice for investors who want to have exposure to some of the biggest and best tech companies without having to pick the winners and losers or having to analyze specific companies. The fund is based on the NASDAQ's 100 largest companies, meaning they're among the most successful and stable. Such companies include Apple and Facebook, each of which comprises a large portion of the total index. Microsoft is another prominent member company. A NASDAQ 100 index fund offers you immediate diversification, so that your portfolio is not exposed to the failure of any single company. The best NASDAQ index funds charge a very low expense ratio, and they're a cheap way to own all the companies in the index. A NASDAQ 100 index fund is a good selection for stock investors looking for growth and willing to deal with significant volatility. Investors should be able to commit to holding it for at least 3 to 5 years. 10. Rental housing. Rental housing can be a great investment if you have the willingness to manage your own properties. And with mortgage rates still near all-time lows, it could be a great time to finance the purchase of a new property, though the unstable economy may make it harder to actually run it. To pursue this route, you'll have to select the right property, finance it, or buy it outright, maintain it, and deal with tenants. You can do very well if you make smart purchases. However, you won't enjoy the ease of buying and selling your assets in the stock market with a click or a tap on your internet-enabled device. Worse, you might have to endure the occasional 3 a.m. call about a broken pipe. But if you hold your assets over time, gradually pay down debt and grow your rents, you'll likely have a powerful cash flow when it comes time to retire. Please like this video and subscribe to this channel for our future updates. Thank you.